Hey everybody, can everybody see me now in Market Minds? We had to make a last minute adjustment here from Mike Shore over to me. All right, so you know what? Sometimes that happens. Sometimes that happens. Michael Clark telling me. I know you guys can hear me here, but if you're on Market Minds, can you see me? Sandip and Gilbert. Okay, Howard, yes. Okay, all right. So we're going to pivot a little bit today in Market Minds. Mike Shore will hop back on tomorrow with me and go through expected value. I'm going to come on today, though. And you know what? I want to put up a really, really interesting statistic here. Okay? It has to do with market returns. It has to do with, kind of rolling the dice and, ahead of the Fed, which is coming out in, a little less than an hour of the decision. And then Powell's at 1:30. Everyone is really kind of uptight about what's going to happen next year, especially if Powell turns a little bit hawkish, right? And all of a sudden says, no, we're not going to have, potentially 4 cuts next year. We're going to have 1 or 2. So I want to post something up here. Hang on. Let me find it. Okay, so a lot of people think that this is going to happen for next year, that it's literally just a roll of the dice what is going to happen to the market. When in reality, and this is a good thing here. This is a really good thing because this should make people feel a little bit more at ease, especially if you're someone that follows the odds and likes the probabilities. Okay, there is a 72% probability the market will be up next year. Now, it doesn't say how much. Okay, doesn't say how much, but a 72% probability. Okay, now let me go through this chart for everybody. Okay, in any given year, folks. Hi, John. Any given year, there is a 73% probability of the market being up. Okay, and we look at this year and we've got S&P's up 28% right now. NASDAQ's up over 30. The Dow's the laggard, up only 16%. Obviously, things can change today after Powell and for the next week and a half, 2 weeks, whatever we have left here in the market this year. Okay, but barring any sort of major, huge catastrophe, we're going to have really, really healthy gains this year. Okay, and those gains are basically triple the market average. Okay, the market average gain a year for the S&Ps anyway is just over 9%. Okay, so thank you, Outdoor Adventure. Let's smash those likes. Let's do that. So the odds of the market rising any given year are 73% regardless of what happened the prior year. Whether the prior year was up, down, unchanged, down huge, up huge, does not matter. Okay? Does not matter. Now, following calendar years where the market was up, it's basically unchanged. 72% probability. 72% probability. Okay, so again, there's a lot of concern. I'm not saying, boy, don't be cautious about next year. Don't get into the situation where you're just buying. Okay, I'm not saying that at all. But there's so much talk out there about the breadth of the market, like we talked about yesterday a little bit, and the fact that we are up so much right now that next year could be, a bit of an issue. We got the odds in our favor. There's no question about it. Okay, so let me ask you all a question, and this is a really good one, because what I'm going to ask you, okay, and what we're going to discuss here is something very, very common on an interview, especially in the trading business. Okay, someone wants to get into the trading business. This is a very typical question. Okay, so let me ask everybody something. You flip a coin. Okay, what odds would you place on a coin flip coming up heads? Okay, if the previous 5 flips were all heads. Okay, what percentage would you put on that of the next flip also being heads? Good, we got a lot of different answers. That's great. That's great. Okay, now, what if the previous 5 flips were tails? What's the odds you think of that next flip coming up heads? Okay. Okay. So this is great that we have a ton of different answers here. A lot of the same, but we've got answers all across the board. So let me break this down. Let me ask you something that, maybe is a little, out of the box, childish, I don't know. Do you think whatever coin you're using, penny, nickel, dime, quarter, silver, dollar, half dollar, whatever it is, do you think the coin knows what the previous flip was, or the previous 5 flips, the previous 100 flips? I would sure hope not, because if it does, man, there's a third world out there or something, right? So the answer is no, right? So every flip is it's a fair coin. It's John, it's not one of those heads I win, tails you lose, right? It's a fair coin. So every flip is independent of the last one, and the one before that, and the one before that. The odds will always be, 100% of the time, the odds will always be 50-50. That next flip, it's coming up heads. Or that next flip is coming up tails. Regardless of what the previous 5, 10, 100, 600,000, whatever it is, regardless of what those previous flips were. It's always 50-50. That is actually something that is called, there's actually a term for this. It's called gambler's fallacy, or also known as Monte Carlo fallacy. Okay, where especially gamblers, they believe if an event happens more frequently or less frequently than expected, an independent event, which a coin flip is an independent event, okay? The fallacy is that the next time those odds are going to change, that they're going to start shifting into, well, if it was heads or, heads the last 3 times, there's a 25% chance only this time, right? 4 flips or whatever it might be. Okay? And that, think of it. Okay? Think of it. You're at a roulette wheel, and I don't know how many of you actually play roulette. Not great odds if you do that. Okay? Not great odds. Okay? If you're at a roulette wheel and the roulette wheel spins a black number 50 times in a row, okay, does that make the next spin any more likely or less likely of that coming up a black number? The answer is no. The odds are what the odds are. Okay, so why do I bring this up? I bring this up because theoretically, this is the same as the stock market. If the odds of the market rising in a given calendar year was actually correlated with what happened before, okay, what do you think people would do? What would we all do? If the odds that we were up 28% this year proved out that next year was going to be a losing year, what would we all be doing? Yeah, we'd go to cash, we'd stay out, we'd be buying as many puts as we could, right? Shorting, there you go. Okay, so the bottom line is the odds of the market rising next year are no higher or no lower than they would be than if the market was unchanged this year or the market was down 20% this year. Okay, so I just wanted to bring that up to everybody because, again, there's a lot of concern out there. And again, that's not to say, things can't change, right? But trading is all about probabilities, weighted dice. I would like those weighted dice, Derek. That's actually my favorite game if I go to Vegas, which I don't go very often, is playing craps. I don't know about all you guys. And in fact, if you're going to go and you're going to play a game out there, a table game, you can absolutely get the best odds if you play the probabilities and play by the book, playing craps more so than any other game that's out there. Anybody ever wants to have a lesson on craps, I would love to give one. Man, I wish we could. Wish on Market Minds here we could have a table roll in here. You guys could all place your pass line or don't pass. That would be sweet. That would be sweet. Anyway, I digress. I would love to do a session on craps, but we would need definitely more than one session. Okay, but while we're talking about probabilities, and I'm totally doing this on the fly today because we had thought Mike was going to be in here. But while we're talking about probabilities and craps, okay, I'm going to relate that to option trading. What delta would you assign to a hard 8? Hard 8 means 4 and 4. 2 dice. Okay? What delta would you assign to snake eyes? 1 and 1 on the dice. Boxcars, 6 and 6 on the dice. Okay? Think of it. What are the probabilities of those particular rolls coming up? I see one right answer. Okay, I see 2 right answers. 3. Excellent, excellent, excellent. So the probability of that is 1/36th, or if we kind of round that off, 3 delta, right? 3 delta. So why do you get paid off so richly on that bet? Why are the odds so big on that bet? Because the probability of that bet actually happening is very small. Well, if you have a 3 delta option, call or put, doesn't matter. What is the probability of that option going into the money by expiration? What do you think that is? Three delta option. What is the probability of that? Sand dip, thank you. Thank you, thank you, thank you. It's 3%. Okay? So I'm trying to correlate games that you guys might play, the odds that you would get in blackjack, roulette, craps, whatever it is, to the odds you're getting trading using the delta of an option. Most people, and they're not wrong, most people believe the delta of the option is how much the value of that option will change as the stock moves $1. And that's true. That's 100% true. But the value or the delta also represents how much probability there is that at expiration, that option will turn into stock, will be in the money. Most people don't really know that or don't really understand that. And that is really something very, very important. And when you can think about it that way, okay, when you can think about it that way, boy, oh boy, now the odds, the payoffs start to really make sense. If I have a delta that's 25, that's telling me the market is pricing in a 25% probability that at expiration, that option will turn into stock. Okay, before we go any further, guys, let's get Groucho out here on the wheel today, guys. Again, doing this on the fly, so let's get that for the wheel here. All right, keep them coming here, guys. Okay, I'll put Groucho up one more time. But think of this, okay? Let's look at a stock here. Let's take a look at Netflix. Okay? Why did I choose Netflix? Because Netflix right now is trading right at 920. We're in a live market. I know it just dipped slightly below. But if we look at the delta of the 920 call and put, what do we see? What do we see? The delta of both of those, of either one of those, is 50. Okay? That not only means that the value of that option is going to change 50 cents if stock moves $1, but if you think about it, there's a 50-50 chance, right? There is a 50-50 chance that either the call is going to be in the money or the put is going to be in the money. At the money option. Does everybody understand that? It's always easiest to look at it that way with a 50 delta option that, okay, if I'm right at the money right now, it's 50-50 chance higher or lower by expiration. Does everybody understand that? Okay, excellent. Excellent, excellent, excellent. Now, Danny, where is my bit.ly here? Okay, guys. So yesterday, the P&L analysis sheets that we went through, I told everybody that today I would post up a link to that, and there you go. That bit.ly, what's called a bit.ly, that link that I just posted up there, everybody, that will take you to the spreadsheets that we used yesterday, which are Excel spreadsheets, which you can all manipulate, change on your own. Okay? All right, let's get Groucho up here one more time, guys. And I certainly appreciate all of you hanging in here today with a little bit of technical difficulty. Zora, you want the slides I used yesterday? I will put up a PDF for that. Let me find that one. I'll get that up there by tomorrow. Okay? But that's what you really need is those spreadsheets. All right, final call for the wheel here, guys. Final call for the wheel. Then we all got to get out of here, grab your cup of coffee, grab your lunch, maybe grabbing a beverage. Who knows? It's Thursday. Or no, today's not Thursday. It's Wednesday. Man, we're all wishing this week to be over with. Get into holiday week next week. Because we've got Powell and the Fed coming out in 32 minutes with their announcement. Again, as I always talk about, everybody, they're going to lower by a quarter. There's not going to be a big market reaction on that. There will be a big market reaction if they wind up not lowering rates at all. Okay? So at 1 o'clock, I would not expect much market movement. However, you are going to start to see things picking up prior to Powell speaking. He comes on at 1:30 Central Time. Okay? And depending what his tone is, and And all of the bots out there, all of the high frequency trading programs, the HFTs that are out there are going to be looking for any sign, any word, any inflection that he uses that policy is changing a little bit. Okay? So that will be when you need to be ready if you're going to be trading during, into, whatever it might be. It's when he speaks, not when the announcement is out there. Okay, guys, wheel is closed. Wheel is closed. We're going to do 2 today again because I feel terribly that we put you guys through such a hardship. And man, oh man, this one looks really, really full today. Remember our rule. Oh, new record on the wheel. Yeah, thank you. Remember our rules. If you already won this week, you can't win again this week. Somebody had a question about that. Well, can I win again next week? Yes, you can. We're not going to take that away from you. Definitely not going to take that away from you. Okay? But we're going to go with 2 today. Okay? Before I spin it, though, I want all you guys to smash that like button. Please. Please, on your YouTube stream. Really, really, really will help us out. Show you where it is. Really, really will help us out. Okay. Now we're getting double sound because that's me live in here as well. Okay. Now we're getting double sound. Smash that like button. Thank you, everybody. All right, let's get rolling here. We're going to do 2 winners today. 2 winners, you got to be here. First one, here we go. Here we go. Mike, Aubrey, Barry. Who's it going to be? Mike Cook. Mike Cook, are you in the house? Are you in the house? Mike Cook is here. Wonderful. Shoot me an email there at prosperswag@prospertrading.com. And just so you know, I am getting ready. Here's my labels that I actually filled out today. I don't know if you can see those on the camera or not. Bunch of labels that are ready to ship today. All right, Mike Cook, winner, winner. One more. Here we go. One more. Boom, there we go. The wheel is in motion. Craig Hertzfield, R. Will. Who is this going to be? R. Will. That is definitely a winner, a new winner. Definitely a new winner. R. Will, are you here? Are you here? Speak up or forever hold your peace. Bingo. Way to go. Nicely done. Did you see the email that I put up in the chat here just a few moments ago? Shoot me an email. If you guys email me today, that swag will go out today. Today there is a week's worth of swag going out, guys. So Mike Cook, R. Will, shoot me that email. Here, I'll put it up here again. There we go. All right. Everybody, why do I have a blank screen there? I should not have. Oh, I know why I had a blank screen. Now it's going to start populating in here, man. It's so much up on the screens here. Everybody, thank you. We will try and get Mike Shore and expected value back in tomorrow. Okay, I think we can make that happen. I will definitely be back down on the CBOE trading floor tomorrow. Okay, there we go. Now everything is up here. I will definitely be back down on the CBOE trading floor tomorrow. We will bring Mike in. And everybody, I really appreciate all of you. Have a great day. Happy Fed Day. We'll see you soon.